The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Okay, folks, Larry Pesavento sitting in for Tommy today. He'll be back, I believe, tomorrow. I wanted to start the show by going across the pond over there in Europe to show you what's going on. These markets in Europe are holding up incredibly well, folks. I posted the chart of the German DAX, and as you can see, we just made a perfect 61% retracement, stopped right on the money. And then I've also posted the FTSE, and again, you can see the beautiful ABCD pattern that's happening so far today. Now, the question that I get most often is, and that I hear it, that I can't believe that I'm hearing it, and I heard it on Bloomberg again this morning, that there's a great deal of similarity between what happened now and what happened in 2008. Boys and girls, let me tell you something. There's only one similarity, and that is the fact that the sentiment of what's going on in the market is so doggone bad. But by golly, let me tell you, the rest of these things, they don't look anything like what we did, back in 2008. Look where we are, folks. In 2008, we dropped 85%. In the NASDAQ, and look where we're below where we were. There's the 2008 low right there. You can see that, and we're below that sentiment low. We're back to where we were back in 1990. That's when the Treasury bonds really took off on their 30-year run up into zero interest rates. So there's really no comparison here. The market's acting incredibly well. I mean, it's not acting. It's just making a nice correction. We have 28% now in the Dow Jones, 28% in the NASDAQ, I think 15% in the Dow Jones and in the S&P, but that's a very, very small amount. Actually, it's really, it's very, very little. Now, one of the things that I like to do is as the market starts to change, possibly direction, I like to go to a smaller time frame, I wanted to post the S&P too, because you'll be able to see here that what we've done here is we're making, we're very close to making this ABCD. I don't know whether this is it or not, but I do know that when this rally comes, it's going to be a really gully buster. You can see the ABCD pattern here. We came within 40 points of it last night. We've rallied sharply so far this morning, but we need to get it above 4,100 in the S&P to what I think would be a confirmation of a significant bottom. However, being the short-term trader that I am, I wanted to, and I'm risk averse basically, and that's what I've based my whole darn career on is as risk as little as possible. You'll see here we had this bottom here right after the market opened on. Let's see. This is Tuesday morning, and of course we made a slightly lower low here. You can see here. Then we've rallied. We pulled back exactly to a 382 here at 40.106, and for there 40.06, and then we rallied up strongly here. And we need to get above this level here, which is around 40.60. That would say that we've got pretty good legs to get above that. Other than that, this is nothing more than another sharp rally that we've seen. These rallies that we have of 60, 80, 100 points, 150 points, they're normal. And, we just got to get used to them. The only way you can get used to them, and for risk aversion, is to move down to a smaller time frame and, use the patterns on the smaller time frame in order to, get in without risking absolute arm and a leg, and we certainly, don't like don't like to do that. Now, one of the things that I wanted to do is I posted the charts of the FTSE and the S&P and the DAX to show you where we are. But we've got a major cross-rate currency. I don't do cross rates very often, but we've got a major one here today that looks really interesting, and I will bring this up. And the reason why I'm bringing it up is that we have friends over in the UK that have to convert money into pounds. And I think this is the fact that the pounds are so weak. You'll be able to see here, look at the euro strength versus the pound. This is about ready to change, folks. In other words, the euro is going to start weakening to the pound. This is a perfect ABCD 3-drive to a top pattern. If you look at the highs to highs to highs, measure the ABCD pattern, and there's another ABCD pattern in between right there. This is telling you that the euro is going to weaken to the pound. So right now, we are already short the euro, and I'm looking to go long the pound. That's basically what I'm going to be doing. I'm going to be short the euro and long the pound, and I'll be doing that probably sometime this morning. And we'll look at that maybe if we have time. We'll look at it a little bit later because we've had some really good moves in some of these things, and I think they're going to be continuing. But this is the first major cross rate that we've done in well over a year, and I think this is going to be one that's going to be, first of all, we know that if we get much above where we were here the other day, yesterday, then we know we've got a problem. And there won't be a problem because we'll be out of it if we get above that 0.86 level. We're at 0.8561 right now. So I hope that gives you a rough idea of what we're looking at. But if we'll do one other thing that I wanted to mention, and I talk about this all the time because I'm risk averse, folks, and I'll tell you, look at this NASDAQ. Just to give you an example, I talk about the 382 on my show all the time, but this is the last day or so. You can see here the market coming down here in the NASDAQ. Look at this. Now, your low is down here, folks. I mean, we hit this low and we started to rally. That's exactly what we done. Perfect 382 retracement here. This was on Friday, and then boom, down we came and lower, and we got down to this level right here. We needed to get a little below 12,000. We got to 12,200, and we've had a pretty good rally, but that's it. Another question people ask me, is this a major bear market? Folks, I think it is, but I will keep my opinion to myself here. Well, not to myself, but I will keep my opinion open, because if we come out of here really, really strong for some unknown reason, like the end of the war or inflation all of a sudden has stopped, which we don't think that's going to happen, but that's a main thing to pay close attention to. Now, speaking of inflation, one of the trades that we were doing yesterday, actually we started it Sunday night. This is a chart of the gasoline, which is very heavily involved in the inflation. And if you'll take a look at this, you'll see that when we got up to this level right here, now this is a 4-hour chart that encompasses well over 6 weeks. You can see here that we had a double ABCD, and we also had two 1.618 expansions coming off of different swings. Boy, that you can't ask for anything better than that, because that tells you that you're able to get into a trade without risking very much. And look what happened the first day. We dropped over 30 cents per gallon in gasoline, which is a considerable sum. We dropped, $7,000 in the crude oil. We happened to be short that one. I gave them the choice of doing gasoline or crude oil. You can't do them both because then you're doubling your risk. So we accepted the 2,000 or the crude oil. Hey, we're going to take a break here. Larry Pesavento setting in for Tommy O'Brien. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors. Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Okay, we're back, folks. Larry Pesavento sitting in for Tommy O'Brien for his morning market kickoff. And we have a caller from Philadelphia. John, are you there?
Hurry, I am here. Can you hear me, sir?
You're coming in perfectly, my friend. Fire away. What are you looking at today?
Excellent. Thanks for taking the call. And thank you for filling in for Tommy O'Brien. It's always very helpful to speak with fellow traders early in the session. So thanks very much. Larry, I also, before I ask you about silver, which is why I'm calling, I wanted to thank you for your repeated guest spots over the weeks and months. For what it's worth, I found it very helpful. It was last November, Larry. I have to just go back in time. You had Stan Harley on your show, and early November, the S&P and the NASDAQ indices were coming off their early October lows, rallying to higher highs. And at that guest appearance of Stan Harley on your show, he remarked and showed with pictures and charts how similar the NASDAQ bull market was, both short, intermediate, and long-term, to the Nikkei Japanese stock index bull market heading into the 1989 top. Well, the NASDAQ did top. I was top-picking, shorting, and have been doing so ever since, doing my best to sidestep bounces. And it's afforded me the result of delivering, just for me, very good gains year to date, trading the NASDAQ and some of the S&P largely on the short side. And it was, if not for that clue that Stan Harley's research work provided, I would not have been able to do that as I look back at things. So thanks very much. All these contributions you get from, Stan or Norm Winsky or Shane Smolini or others, you get some real gems from time to time. So thank you very much.
Well, I agree with you 100%, and thank you for joining us all the time, Mr. Z, because you could do your own show here, and you'd have a great following because you know what's happening, and you do a great job at it. So what's your question about the silver, Z?
Question. I know you focus very short term for trading purposes, and I wanted to ask your view in that time frame. Full disclosure, last night at 8, somewhere between 8 and 9, I bought July silver at 21.75, I think was the number. But my reason for doing so, Larry, is shown on a weekly spot silver chart I posted in the Tiger's Den on Discord within the past 20 minutes. And what I see on that weekly chart, Larry, is since August of 2020, COMEX silver has declined, sometimes abruptly, but has now declined for the 5th time into the 22 to 21.50 area and bounced sharply. And interestingly enough, I give a big hat tip to Basil Chapman and his, as he calls it, his Sears and Roebuck toolbox of charting tools. And one particular tool that's come into play here on the silver weekly chart is the 200-week exponential moving average. And Basil has pointed out and proven over the years, when a market goes to that indicator, when it rallies to it or pulls back on top of it, turns and rejects it, that is a very important signal. Well, that 200-week EMA comes in right at 21.60, right at the low of yesterday. So I bought it just for that reason. You know me, Larry, I don't risk much when I am leveraged trading. So if it doesn't turn and move higher, I'll be out at, a manageable loss. But I wanted to ask you, just on your short-term trading and the patterns you see and your fib ratios, can you see the low of yesterday as being a completed decline of some consequence?
Z, I posted my chart, the weekly chart, and you're correct. That 2160 is, you can see the line right there. This is the third time we've hit it. Well, I shouldn't say the word hope because that's a terrible trading word, but I would really like to see silver break one more time down to right around 20 cents. And $20 an ounce, and then I would like to. I would really be highly aggressive to the long side. And that would be the same price if we could get gold below 1,800. We've got gold at 1,860, I believe, right now. I'd like to see one more move down. As you know, I'm short the gold market. I don't trade silver that often because of the fact that it's a little less liquid. Well, it's 1/6 the liquidity of the gold, but gold is just much easier for me to trade. So I'm short the gold right now, looking for lower prices. But if we were ever to get that silver down to that 20-cent level, and if you look at it, you can see that there is a really strong line here matching the highs going back over the last several years that comes in right about that same level. And that would also be a major ABCD on the weekly. That's mother, God, and country for me. So that's what I'm looking for, is the potential to get there. Now, if I'm wrong, we're going to see 23 or 24 cents faster than we're going to see 20 cents. So we're going to have to make that decision here in the next day or two, both in gold and in silver. Right now, I've lowered my stop down in the short gold to 1868, and that locks in. We sold it at 1925 the first time and 1909 the second time, so that would lock in, well over $100 on the 2 contracts, and that's a pretty good return. But I'm just waiting to see if we can push down one more time. But whether we do or not, I don't know. But I still think we got a shot here to get there at that $20 an ounce silver.
Larry, I thank you for pointing out just a chart feature that you saw on that weekly chart that I had forgotten to look at. There's so many things that I often miss. But here, I'll just repeat it for your listeners. It comes into the subject of swing points and their importance. And, of course, it's Tom O'Brien, our leader, who has taught us with real-time proof of the importance of markets at swing points. In the case of silver, it was July of 2016. I think that was the year in which there were, yes, it was July of 2016 when there was a good, sharp silver rally.
Yes,
and
remember it very well.
Right at 21, maybe it was 21.30. I just can't help but just remark to myself, hey, that's a swing point high. The swing point lows that have occurred in the past 2 years have held that level. So I'm going to assume that continues until proven wrong. But I appreciate your input, Larry. Thanks so much.
You bet, John. Thank you for joining us today, though. Mr. Z from the Tiger Den, folks. You want a good way to look at markets, go to the Tiger Den. 877-927-6648. Larry Pesavento setting in for Tommy O'Brien.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. Larry Pesavento setting in for Tommy O'Brien today for the morning market kickoff. We're going to switch over to a real market now, folks, the one that's got a lot of money in it, and that's the Treasury bond market. I posted the daily chart up here. I'd like you to notice that we came down. We rallied up to a 382. We made that ABCD pattern yesterday down when we hit 134.29, folks. And from that level, we've rallied 5 handles. We're trading in the 139 level right now. I've been short this since way back here. We added it one more time here. We added it another time right here, and we got out of everything today at the 138 level. The reason why we did that was 2 reasons. A, it completed the ABCD pattern. Secondly, open interest has increased a lot here yesterday, folks, with that big reversal. That was real money coming in. I know it's a flight to quality, but you got to respect it. You know, I'm a technician, so when I see things that say, hey, you know, there are new players coming into the game and risk has increased, and I had huge profits in it for our folks, I said, by golly, you know, we just got to stand aside. So I lowered the stop down to 138.08. We got out of that. And we had 3 positions on. All 3 of them made really good money. Of course, the first 2 made a lot of money, but that's neither here nor there. You can't get it all. But the fact that we've had that big run. Now, the $64 question is how much of a rally are we get from this high that we made way back up here? So here's what we've got to be watching. We've got to see. We could get a rally here in Treasury bonds, folks, because we've come down from 170 down to 134. You know, we could rally back, 38% and have a $20,000 rally in Treasury bonds. In the crash of 1987, I have to tell you the story behind this. You like to hear stories, so you're going to hear one. Coming into October the 16th, that was a Friday, when the market was down 106 points in the Dow, my puts had expired. With a huge profit. I mean, I was so happy because I was able to fund a nice little medical education for my youngest daughter. And the main thing was that they expired on the 16th. Now, if I'd had November puts, I could have bought Harvard, but I know it's not quite that bad. But it was a lot of money. It would have been a couple $1 million. But that neither here nor there. I still had 4 short S&P on. That was with the big handles, folks. That would be equivalent to 40 contracts now because it was $500 a point, not $50 a point. And of course, they gapped down, well over, I think they grabbed from 260 down to 220 that morning, and it was a huge amount. It bankrupted more floor traders than just about anything that had ever happened before. I got out way too soon, but I was still, quite happy. But the other part of the trade that I had was I had a really good buy signal in bonds, and the bonds were only down, with the stock market down 16% that day, bonds were only down a half a point, 16 points, $500. And I was more concerned about getting my money out of Lynn Waldock than I was about what was going to happen to the market, because it was so scary with 1,600 issues on the New York Stock Exchange at that time, and there were only 13 up issues, if you can believe that. And those were the 13 you should have bought, because if you went back and looked, if you stopped to ask the question, any stock that can be up with the rest of the market down by 16%, for God's sakes, don't sell it. And boy, that's exactly what happened. Anyway, bonds, I was nervous, and so I took a $500 loss in the Treasury bonds, still giving me a great day. And believe it or not, folks, I hate to say this, but the bonds rallied 13 handles. $13,000, I mean, just straight up. I mean, it was straight up. And part of it was interest rates were dropping, big time dropping. And, they've been dropping until, we made our top here a year and a half ago when they started to tell us about, zero interest rates, which to me was the funniest thing I've ever heard in all my financial stuff. So anyway, we got a good rally going in here. The $64 question, are we going to go down and make those targets that we're looking at in the S&P? And there's, we have targets that are set there. I posted again. I'm going to bring it up again so you'll be able to see it. We're very, very close And I believe when we get to this level, this is about as perfect as a chart pattern as you're going to find. Now, this is the cash S&P. The E-mini S&P trades off of it. That number in the S&P comes in at 39.23. That's 100 handles from where we are right now, a little more than 100 handles. But this thing jumps around a lot. So watch that if we get there. Now, the one thing that we'd like to see is we'd like to see the distance between A and B equal to distance in C and D, and that doesn't happen until we get to the point of May the 22nd. Now, this is where the whole process of what I was doing with this trade, I'm going to go through it one more time because I get questions about it every day. This is the stock market from 1987. I'm not saying it's like 87. I'm just saying it looks like 87. That's all I'm telling you. Here's where we were. We topped on August the 25th, 1987 at 2,700 in the Dow. We came down into the solar eclipse on the 23rd of September, and then we rallied into October the 2nd. Now, we had a solar eclipse here on the 29th of April. We had the Venus-Uranus aspect coming in here on the 5th. So if you took that distance, we had to be down sharply on Monday, which we were. That sets up the possibility that we've got the number of days between May the 5th of where we are right now, May the 5th right now, and where we were on October the 2nd of 1987. You add those 17 days, that takes you to the low that should come in on May the 22nd. Now, if we close above 4150 or something in the S&P, that's certainly going to negate all of this. But until that happens, we have to assume that this is what's going on. So that's what I'm looking at. The question that I had to ask myself today is if we get more than a 100-point rally. So what I did was I put the stop on the position at 40.60. That would lock in, huge profits on what we've been able to do. It doesn't always work that way, but if we get above that 40.60, I'm going to stand aside and wait for a potential buy signal, because I think when this rally comes, it's going to be a monster. We're starting to see cracks in the inflation thing. Look at gasoline, folks. I've already shown you we've dropped 30 cents a gallon in gasoline in 2 days after we made that 1.618 expansion. Same thing in soybeans, corn, wheat. We've sold off in a lot of these, and the meat markets are just getting massacred. I mean, I should have said slaughtered. But anyway, we've had breaks down in cattle and in hogs, and that means inflation is slowing down in some of these other things. However, on the other part of this, cotton, which is a very important part of the inflation, is still going straight up, and that's mainly due to weather and the fact that there is a shortage of cotton across the world. So I hope these are some of the things that I'm looking at to see whether these things are important or not. We'll have to do one at a time. Now, I wanted to mention, too, that we've had market breadth. I have to show you this because this is one of the reasons why the market is down so much, is the market has been rotating quite a bit. And when you stop and see where Robinhood, and I see Rivian now, the truck company that was the truck of the year, it's down over 90-some% from its high. And then today on Bloomberg, I saw that the sheikh from Saudi Arabia that's been backing it reiterated his bullishness, even though it's down 92% from its high. Well, good for him. He's got a lot of money. He can afford to do that. Anyway, you'll notice that the breadth of the market has been dropping. That's why the market's lower, but that's going to change. I think we got a good buying opportunity. It might just be a short covering rally, but by golly, let's get ready. We'll be right back, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, Larry Pesavento setting in for Tommy O'Brien this morning. And what I'd like to do is run through some of the FANG stocks. We're going to do the main ones, of course. And we're going to start out here with Microsoft. As you can see here, we've had a breakdown below the lows of February and March. You can see the 382 retracement that we had last week. And now we're breaking down, and we've got a price objective of 242. We're trading at 269 as of last night. The market's sharply higher, of course, this morning, but I still think we got a chance at 242. That's a 1.618 expansion. That would be coming in right around May the 22nd, if in fact this is the way that it's going to unfold. This is what we don't know. Now, here's one that has been in the news all the time because of Mr. Musk, and that is Tesla. This has been a very, very strong stock, but recently, he had sold some to cover his purchase of Twitter. But you can see we had the 78% retracement up here, folks. Then we had the lower highs. Each one of these, beautiful Gartley pattern, beautiful 382 retracement, and now we're below the 78% level. We should be up today in the Tesla holding that because yesterday's low was right at a 78% level, also giving a little bit of support for Tesla. I don't own a Tesla. I've only ridden in one once in my whole life, and it's a very quiet car, and it is certainly a marvel at what it can do with no noise at all. I mean, that's just really, totally amazing to me. Now, we want to do another one. Remember, folks, when we look at Microsoft and Apple, what we're looking at here, I'm going to do Apple next, because between Microsoft and Apple, you're looking at roughly 13% of the S&P 500. I mean, stop and think of that, 13% of 500 stocks. You can see the rally here that we had in Apple last week was right at a 382 retracement. That was spot on. That was a beautiful little Gartley, A, B, C, D, and boom, down we've come. We have held this level so far. We rallied pretty strongly this morning from what I understand. I think it was up $4 or $5 as I recall. But I still think that this has got a possibility of taking out these lows one more time into May the 22nd, and then we will find. And I'm doing that as a simple time count, folks. That's all I'm doing. And that's when you see these things occur. I know they're astrological, and we got some pretty smart people coming on here with Shane and Norm Winsky and Jeff Hughes and Stan Harley. By the way, I'm trying to have Stan Harley as our guest tomorrow, so we'll keep our fingers crossed. On Thursday, we're going to have Paula Webb, and on Friday, we are going to have Mr. Peter Eliades, and we certainly want to listen to what Peter has to say because he's been around for a long time and he is really smart at these cycle stuff and Fibonacci stuff. I learned a lot of my Fibonacci stuff from Peter, back in 1970 and 71 when we were there at at McCulloch Oil Building with Conti Commodities. Okay, let's move on to another one of these. We'll cover as we go through. Here's one that just is in serious trouble, folks. I know we don't have a GoFundMe page yet, but if we get Facebook just a little bit lower, I imagine Mr. Zuckerberg is going to come out for a GoFundMe page. You can see this has been bearish for a very long time. You can see this right here. We've been in a downtrend, and then, of course, we have this humongous gap. We try to fill it right here. Look at this, folks. I always talk about 382, bada bing, bada boom. There it was, 382. You go down, you make new lows, and you go up and you make another 382 off of that high. So Facebook is in trouble, folks. I don't know how far it's going to go down, but my guess is probably into the double digits, probably get to about 99 or maybe even possibly lower than that. But those are long-term predictions that I don't like to do because, you're taking a wild guess, which is okay. Guesses are all right. But I really look at the numbers and try to see. Here's another one. You talk about another stock that is in trouble here in the is Netflix. I don't belong to Netflix. I never have. But you can see here we had a 382 retracement here after another big gap down. Rally up exactly to the 382 retracement. Here's a little commercial for you, folks. If you trade short term and you're interested in making money, try to listen to us on the 17th of May. I'm going to be doing 5 hours, and we're in bear markets right now, folks, and nothing works better in bear markets than 382 ABCDs, and I think you're going to have a lot of fun. My goal is to make money for you. We've done 3 of them. They've done well. And we've done some teaching in between, but this time I want to focus more on the making money part. And we're going to do some teaching, of course. We're going to go through the things that are important, but the main thing is to make money on this, and that's what we're here for, try to make a few bucks. And that's what we're going to be doing. Hopefully it'll be more than a few, and we're also going to be talking about, we'll get to the next one one more time up here if we get a chance. I wanted to talk a little bit about Bitcoin because I think the Bitcoin is getting close to what we think is a major bottom in here. And we've got a couple of these little cryptos that look really interesting. And we're going to be talking about those on May the 17th also. Okay, getting back to the FANG stocks, here's one that's holding up relatively well compared to all the others. So you can see the ABCD pattern. This is Alphabet, a.k.a. Google. But folks, look at this, folks. Look what the news came out here. You remember the real bullish news about how bullish the market was with all the earnings, the stock split 10 for 1. Look at that. Look at the A, B. Look at the 61% retracement, A, B, C, D. You can do that all without fundamentals. Just look at a little bit ABC. Look at the beautiful 1-3-5 pattern, one of our favorite patterns that we'll be looking at on shorter time frames, of course, on the 17th. So all these are pattern, folks, ABCDs everywhere. All we do is we add some Fibonacci ratios to them and try to determine where we're going to be in the next 2 or 3 hours or 2 or 3 days. That's our goal, is to keep our risk small, And you want to eat like an elephant and poop like a bird, as they always say in the old trading things. Now, here is one that has made a major bottom here, folks. Now, this is and I'm not a fan of this. I don't know anything about, I buy off of Amazon all the time, but this has completed a major ABCD down here. You can see there's the number. You can see what the low was. The low was almost to the exact tick on a $2,600 stock or $2,200 stock. Are you kidding me? It comes within $2. Hello, operator. I mean, that's ABCD. And that's what it's all about. And that's been the one that, we had a pretty good rally. You can see even in a down market, we had a pretty good rally. So that should be one to pay very, very close attention to. All of these have to be paid attention to because we got to see what the rallies are going to be as we move back up. We got a what do we call it? A commercial coming up here pretty soon. So we get back. I want to talk just a little bit more about the cryptocurrencies for a second, just to get an idea of where we are. Well, we made the 382 in the S&P up there, folks, at 40.65. We're now only dropped 40 handles since that time. Well, you got to love these markets. Anyway, let's keep an eye on these as we go through looking at some of these. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
With market volatility roaring back in April, Larry Pesavento has just announced a 5-hour live trading webinar coming up on May 17th. Larry Pesavento is a 56-year trading veteran and has mastered his trading skills through many different market fluctuations. Join Larry on May 17th as he hosts a live 5-hour trading webinar from 9 a.m. to 2 p.m. Eastern Time, giving you insight into how he analyzes the market and decides his plays. Larry will delve deep into the ABCD trading pattern, explaining how to structure your trading day, the times most likely to generate signals, which signals to ignore, and how to use the pattern to mitigate risk. In this all-day 5-hour live trading webinar, take a seat by Larry's side as he trades the markets real time, including the Dow and S&P 500E mini, crude oil, natural gas, gold, treasury bonds, wheat and soybeans, the euro dollar, pound dollar, dollar yen, and more. If you've ever wanted to get inside the mind of a market master, you cannot miss this live trading webinar. To sign up today, just visit the front page of TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, Larry Pesavento sitting in for Tommy O'Brien. We've covered the FANG stocks, the main. Well, those are the main ones. So I do believe that we're very close to a significant bottom. I listened to Basil Chapman's show yesterday. He pointed to a lot of different things, and some of them are just as clear as a bell. One of them happened to be the fact that there seems to be a little bit of relief from the inflation aspect from looking at commodities, and we see that. If you follow the Australian dollar at all, I mean, you would really get a pretty good idea of what's happening with the Australian dollar. But unfortunately, I'm going to be able to show this to you because it's one of our two things that it does. It shows you the importance of the 382 retracement again, and then it also shows you that the Australian dollar is related to commodities, folks. When the Australian dollar rallies like it did way back here when we were up there at that 75 level, that was neither here nor there because that's when inflation was the greatest, supposedly. And now we've had big breaks in the grains, well, corn a little bit, beans quite a bit, and wheat just a tiny bit. But the livestock market's been decimated. You can see the first 382 retracement here in the Australian dollar, the second 382 retracement, and then, of course, the big breakdown, and we're still breaking down today. That's usually indicative of the fact that, we've had a pretty good break in some of these things. Also, the price of copper held the 410 level, which very few people thought that it would have. That was a 78% level. It needs to hold that if it's going to. I think it's up a tiny bit today. I haven't really checked it as of yet, but those are few. This is it, folks. I'm setting in for Tommy today. It's been a real pleasure. Thank you for joining me. I hope you can join me on the 17th of May for the 5-hour session. And live every day in an attitude of gratitude, and may God bless. And do something nice for your neighbors today, folks, because by golly, some of them are really in serious trouble. And believe it or not, even in the neighborhood where we are here, we've got some neighbors that are elderly that literally can't get to the doctor. They can't get to the market, and you got to give them a help out once in a while. We'll see you on the flip side at 1 hour from now. I'll be doing my regular show. May God bless.